Welcome. I'm your assessor and mentor for today's Masterclass Explainer, where we're going to build a rock-solid, completely jargon-free understanding of accounting principles and procedures. Specifically, we'll be drilling down into the Level 1 requirements for termination of contract, corporate recovery, and insolvency. If you're currently preparing for your APC, this is a core competency, and getting the basics absolutely spot on is just vital. See these concrete steps? Well, just like building a solid staircase, we're going to construct your Level 1 knowledge systematically. We're focusing purely on what you need to know. The knowing stage. We don't want to be tripping over Level 2 practical complexities or getting bogged down in Level 3 advisory pitfalls. Assessors really just want to see clear, structured thinking.
So, here's our roadmap for today. We'll cover termination of contract, move into corporate recovery and insolvency, discuss your specific role as an RICS member, and finally, we'll tackle a mock interview Q&A to get you completely interview ready. All right, let's jump right into Section 1, termination of contract, the what and the why.
We'll begin with termination itself. Now, this simply means bringing a construction contract to an end, usually because one party hasn't quite played by the rules. This is what we call a breach of contract. Think of a breach in really practical terms, something like a contractor actually finishing their work, but leaving some major defects behind. Now, not all breaches lead to termination, but fundamentally, it's a failure to comply with an imposed obligation. Now, what about a repudiatory breach? This one is defined by its absolute severity. Repudiation is a material breach where one party basically turns around and shows they have zero intention of honoring the contract anymore. A really classic construction example of repudiation is a contractor simply downing tools, abandoning the site, removing their plant, and flat out refusing to carry out the work. Or, on the flip side, an employer completely denying the contractor access to the site. The key takeaway here, it is heavily fault-based. On the other hand, we have frustration. And listen, this isn't just about a project getting slightly more expensive or difficult. Frustration actually means neither party is at fault. It happens when a completely unforeseen circumstance intervenes, making the contract impossible or even illegal to perform. When this happens, the contract is automatically voided, and both parties are officially excused from their future obligations. If an assessor asks you to contrast these two, and they very likely will, just keep these core concepts in mind. Repudiation is fault-based. It's about someone breaking the rules, like a flat refusal to work. Frustration, however, is an outside event stopping the game entirely, with absolutely no fault attached to anyone. Finally, when it comes to termination, we have termination at will. Sometimes you'll hear this called termination for convenience, though, let's be honest, it rarely feels very convenient at the time. The contract itself might actually allow a party to terminate without proving any breach at all. In the real world of business, this happens when a project becomes entirely unprofitable. Maybe it loses its financing or planning permission gets suspended indefinitely. It's purely a commercial decision rather than a penalty. Let's move on to Section 2, corporate recovery and insolvency. This is all about financial health and failure. Building on our knowledge of termination, we have to look at what happens when the money runs out. You've really got to keep this distinction crystal clear for your assessors. Corporate recovery? That's the rescue attempt. It's the processes and actions taken, usually with financial and legal advice, to try and bring an ailing company back to full health. Insolvency, however, is the harsh legal reality of a company not having enough assets to cover its debts or simply being unable to pay its bills when they fall due. Okay, there are 5 main types of insolvency you absolutely need to know for Level 1. Memorize this simple framework. First up, company voluntary arrangements, or CVAs. Think of this as a rescue payment plan that's been approved by the creditors. Second is administration, where an administrator steps in to protect assets and tries to rescue the company as a going concern. Notice how those first two are entirely focused on rescue? Then we have winding up, which is a forced court closure. Fourth is receivership, where a secured creditor, like a bank, takes over just to recover their specific money. And finally, voluntary liquidation, where the directors themselves actually vote that the liabilities are just too great and the company has to close its doors. Section 3, the role of the RICS member. Let's talk about Level 1 awareness in action. So what's your actual role here? The crucial point is how you, as an RCIS member, behave in these high-stress situations while strictly sticking to Level 1 knowledge. Your very first duty is commercial awareness. You need to be able to spot the early warning signs that a company is struggling. Keep your eyes peeled for consistently late payments to suppliers or HMRC, maybe a sudden, totally unexplained lack of labor or materials on site, or whispers of legal action from creditors. Trust me, prevention and early management are always better than a sudden termination. But, if the worst does happen and a contractor becomes insolvent, you must know your immediate procedural steps. Number 1, take urgent action to protect your client's interests. Number 2, secure the site to make it safe and prevent any theft of materials. Number 3, issue a highly accurate valuation statement detailing exactly what the financial position is at that very moment. And number 4, prepare a notional final account to present to the receiver or liquidator.
Getting these exact steps straight in your head prepares you perfectly to face the final and definitely most important part of our masterclass explainer. Structured thinking is exactly what separates a pass from a referral. You've got the knowledge, now let's apply it under a bit of pressure.
Section 4, the crucible. Let's do some mock interview Q&A and practice structuring your APC answers.
Imagine I'm your assessor. In your APC interview, we want clear, jargon-free explanations. So let's practice. Candidate, can you explain the difference between a contract ending through frustration versus repudiation? Okay, let's pause here. Take a breath. If you're asked this, please don't rush. Structure your thoughts into that fault versus no fault paradigm we looked at earlier, and deliver your answer calmly.
Here's what a brilliant level 1 answer sounds like. Frustration involves unforeseen, impossible circumstances with no party at fault, rendering the contract void. Repudiation, however, is a severe fault-based breach where a party shows they no longer intend to be bound by the contract, such as a contractor walking off site. Notice how that perfect answer defines the terms simply, contrasts them clearly, and immediately anchors them with a real-world construction example. That's exactly what we want to hear. Let's try another one. Question 2. If your main contractor suddenly becomes insolvent, what are 3 immediate things you should be aware of as an RICS member? Again, pause. Use the rule of 3. Assessors absolutely love lists of 3. Avoid getting bogged down in the complex level 2 or 3 legal mechanics of how to actually write the termination notices. Just stick to the immediate level 1 actions.
And here is your gold standard reply. I would ensure the site is immediately secured and made safe. I would issue a valuation statement detailing the exact current financial position, and I would prepare a notional final account for the insolvency practitioner. This answer is absolute gold because it clearly shows practical commercial awareness and exact level 1 procedural knowledge, all without overstepping your professional boundaries.
So, I'm going to leave you with this somewhat provocative thought. If an assessor asked you to define the 5 types of insolvency right now, could you list them clearly without hesitation? Could you comfortably differentiate between a CVA and administration? Keep reviewing these core concepts. Practice speaking your answers out loud to a mirror or maybe a colleague, and ask yourself, are you really ready to own your level 1 interview? Thank you so much for joining me for this explainer, and best of luck with your preparation.